Here to discuss the decline both of oil prices and what's going on Wall Street, Peter Schiff, CEO of Euro Pacific Capital. Peter, it is so good to have you back on America's Forum. And if memory serves, you were warning us when we last got together. Yeah, it's good news at the pump, but there are some economic implications, and we're seeing that now on Wall Street. Explain what's behind it.
Well, first of all, I don't think it's the falling oil price that is causing the stock market to go down. I think oil prices and the stock market are both going down for the same reason. And you have to understand that our phony recovery that the Fed erected, it did it on a foundation of quantitative easing and 0% interest rates. And those policies are theoretically coming to an end. And the asset bubbles that they supported are, running out of air. And so oil prices have already come down. Now stock prices are starting to come down because without quantitative easing we're going to have a bear market in stocks. We're going to have real estate prices going down. All these markets are going to be coming down. It's not just oil. So again, it's not about whether or not oil prices going down is good for the economy. It's about why oil prices are going down and why the decline is not going to be limited to the oil market, but all of the asset markets that were inflated by the Fed.
So, Peter, the new Congress begins today. If you were advising Congress members, what would you be telling them to focus on to improve our economy?
Well, they have to shrink the size of government. I mean, the government is the biggest burden on the economy, so they need to slash government spending. They need to cut substantially in entitlements. They need to shrink the federal workforce. They need to abolish a lot of regulations that have been implemented over the years. Of course, none of this is going to happen. The new Congress is simply going to grow the size of government further. They're going to increase the debt ceiling and keep on borrowing, so they're going to add to the economic misery that the average American is experiencing.
Well, Peter, we cannot mark you down as undecided when it comes to the agenda, what you think is going to happen in the new Congress. But in the 2.5 minutes remaining, it appears now that both the House and Senate are willing to embrace an idea that Ron Paul had years ago and that I supported, the notion of auditing the Federal Reserve. You talk about quantitative easing. That's the economically sophisticated way to say the Fed printing more paper money. Is the audit of the Federal Reserve a good thing, or do you believe it to be largely cosmetic?
Well, look, I think it would be a good thing if we could have a legitimate, fair audit. I would question whether or not that would be the case, even if they were to enable it to happen. I don't necessarily trust the government, but I don't know that President Obama would even sign such legislation. And of course, the Federal Reserve and a lot of the Wall Street bankers are very much opposed to this, and they are the major donors to both sides of the political divide. So I don't know if we're going to get something like that passed anyway, because there's a lot of vested interests with a lot of money that don't want to shine a light on what's going on at the Federal Reserve.
Alan Greenspan said the economy won't fully recover until American companies invest more in productive assets and the housing market bounces back. Do you agree with that?
Partially. I think the U.S. economy won't recover until the Federal Reserve gets out of the way, until they allow interest rates to rise and allow the economic carnage that would result from that. You see, everything that the Federal Reserve has done since 2008, we haven't solved any of the structural problems that produced the financial crisis and the Great Recession. We've made them all worse. What we need to do is have the recession that the Fed cut short. We need to let interest rates go up, let stocks go down, let real estate go down, let big banks fail. We need a clean house. We need to let speculators lose money, and we need to force the federal government to dramatically reduce its size. But none of that is happening as long as the Federal Reserve is monetizing the debts and inflating these bubbles. And unfortunately, they're about to repeat their mistakes, because I think we're headed for QE4, because as the economic recovery disappears, as the markets start to go down, the Fed is going to cave in, and they're going to give the addicts on Wall Street exactly what they want, which is another fix of the monetary heroin.
And Peter, we will leave it right there. We're so pleased you're going to stay with us through the break, because we want to talk more about our nation taking its economic medicine now, so to speak, rather than delaying it. Stay with us.